Well, Tom, I can't seem to hear you again. It might be the HDMI cable issue.
Can you hear me now?
There we go. Now we can hear you perfectly.
Thank you. Yeah, thanks for bearing with. My colleagues should be hopping on in a second, but I suppose I can sort of get it started in interest of expediency. So thanks for introducing me. Thanks for having us on the call. It's a really interesting call you guys have going. Really excited about the space. A lot of interesting projects. So I was the lead on developing the smart contracts and SDK for a project called Zap, which went live 6 to 8 months ago. Sort of initial pilot, but it was initially based as a curation for oracles, so a curation platform. We wanted to do sort of a bonding curve solution that would allow for price discovery of oracles with integrity, and sort of branched off into just the general mechanics of bonding curves, and it was exciting. We pursued a very specific sort of implementation. It's got its advantages and disadvantages, but maybe until my colleague gets on, I can just go over that real quick. So let me just screencast this page. Okay, great. Is this page visible?
No, it's not shared on my side yet.
Okay. One moment. Okay. 1 minute. Thanks for bearing with. Is that working?
No, not yet.
Okay. Thanks for
now it's sharing.
Oh, it's sharing. Okay. Is it like a beach with water, or is it a gray?
It's the Zap curation market. So
okay. Great. Okay. So like I was saying, we started out trying to do an Oracle curation market, and then sort of got into the mechanics of bonding curves and branched out a little bit. We're still doing some experiments. It is on mainnet, but it is highly experimental and in development. Like I said, I was the lead on the initial development, so it's now being pursued in a variety of directions. But here we have a little web portal set up to demonstrate some of this material. Basically, you can log in. Actually, we don't recommend logging with a third-party server, obviously. So here we just have like a light interface for interfacing with some of the platforms. So essentially, we have some oracles and services we can bond to, some very simple bonding curves here. The way we approached the bonding curve implementation itself, I should say the current build that's stable is on Ethereum. We have a testnet EOS build, sort of angled for different purposes, and ostensibly there's an Eternity bridge in the works. But so what we have here are tools for what we call providers, which is if you're a service provider, you're a data provider in Oracle, you can throw a bonding curve. It allows people to stake to you and receive a a secondary token in exchange for that bond. So there's an ERC20 token Zap that's currently being used. They can start a curve here. Maybe I want to have a service that offers, so maybe this will mint, 100,000 secondary tokens. The first piece of the curve, the first 100,000 secondary tokens, I'm going to say that price is X. Maybe the second piece of the curve, we'll say it's X squared plus some Y offset. I don't know how that's going to look, but excuse me. We can add this curve. So little scaling issues, obviously it's still in development, but if we want to link some markdown to this, link some JSON, we can go ahead and publish this and wait for the transactions. You can see, we have a few different services you can bond to. This is our sort of initial offering that we approached as Oracle services, etc. However, we got excited by concepts of like contesting, representing assets, etc. So, we can do that as well. And maybe I'll just sort of cover a simple example from a contest that we have up right now, which is a little decentralized hackathon, right? So each contestant has a bonding curve. The hackathon lasts 1 month. 1 month. This example is live on mainnet, but it's an initial example. It's set by an Oracle that's going to use the tool clock to count the number of lines of code in a repository. So when you'd go about entering this contest by creating your bonding curve. So here I just created this bonding curve that represents this repo. People want to get involved in the project. If they think this is a contender for the win, they could bond to it. Also, since these are emitting ERC20 tokens, obviously, we can trade them on something like Ether Delta. Here we're using Fork Delta for the moment, but basically in this example, for the life cycle of this contest, these secondary tokens, which represent different repo contestants, can be traded, and price discovery can happen on third-party markets. Unbonding is not actually allowed by this contract until the closing, the settlement of the contest. And the way this example is set up, 50% of the liquidated bonded tokens go to the beneficiary address set by the candidate, and 50% are split amongst the holders of the winning candidate tokens. So if I were to say other repos were to enter into this competition, at the end of the contest, those would be liquidated. The tokens that were bonded would be split 50-50 between the beneficiary and the winning token holders. Well, then I think my colleague John may have helped on. John, are you present?
Are you able to?
Yeah, just give sort of a rough shot overview of some of the admin and the Git contest. But
okay, nice.
If you want to sort of walk through a little bit more carefully, and we can maybe get to a little bit more details.
If you just want to pull back to the web admin for the screen.
Yes.
Awesome. So here it's just used in a. Do you go over the curve generation, just polynomial functions, how they generate those curves?
Yeah, just very briefly, but
okay.
We can touch on it again.
Yeah, it's basically just a platform for creating and interacting with bonding curves really easily through MetaMask. So people can point and click from their MetaMask wallet, and it generates the transactions. They can either create the contract for the bonding curve or interact with them via bonding or unbonding. And it's got both, a standard non-tradable tokens so that you have to interact directly through the bonding curve, or generate ERC20 tokens on the curve so that they can be traded on a third party or a secondary market.
Yeah. So I just briefly touched on what we want to use to like a contest, and we have this decentralized hackathon as sort of a demo.
And that could be used for a bunch of different purposes. This was just our first easiest use case with, you know, lines of code being an arbitrary metric that are measuring the contest winners. But this could be used for everything from, you know, futures market where you're taking a long and short position and the winning curve is based on whether or not the asset goes up or down. So we could have tradable markets on, you know, conventional assets and things like that just by having an oracle that queries, with that being the arbitrary metric that settles the contest.
Yeah, exactly. So there's a lot. So if anyone wants to throw up their service behind a bonding curve, do whatever, we have hooks to, you know, Socket.io if you want to do off-chain streaming, but, you know, sort of use the bonding curve stuff to initiate subscriptions for like streaming media. We can, you know, do oracles, obviously. Just want to emphasize, you know, things have been like on mainnet for 6 to 8 months.
Yeah. We want to do questions for like what last couple of minutes.
Sure, yeah. So if anyone in the audience has any questions, you're welcome to unmute yourself and ask. We have about five minutes before the next presentation can start. Oh, yeah, Jeff?
Sorry, that just popped on my audio. I didn't mean to do that. I apologize.
No.
I do have a question though. Actually, you guys were some of the first working with bonding curves that I came across. You've been working on this for quite a while, haven't you?
Yeah, most definitely.
Very cool. Very cool.
Yeah.
Exciting to see this, and I haven't had a chance to dig into any of your stuff, but I'd love to chat more about it. We're working on, I don't know if you've read about the Augmented bonding curve, which is a block science design, and I'd love to run that past you guys and see, you know, how what you think of that, and exactly the details of how you're running your system.
Yeah, absolutely.
Oh yeah, we'd love to hear. Yeah, absolutely. Any conversation, I'm going to dig in.
Yeah, now that this is all sort of stood up, we're kind of in the phase of building templates for different things. The contest being sort of the first template where, based on a settlement, because like something with like a tradable futures contract, sort of the hard part of having price discovery on that is the logistics of exchange listing for a week-long futures contract or something. That's sort of the bonding curve solved that issue of having an instantly liquid market for these things.
Right, exactly. And again, you know, like this is the first iteration. So, you know, this new stuff, augmented bonding curves, all this stuff, it's really fascinating. We'd like to see how we can, you know, take these ideas and sort of further apply them.
Yeah, definitely. And thank you guys so much for taking the time to present to us. I wonder if you could please maybe just drop into the chat channel some of the places that we can reach you guys. So either your social handles, maybe a link to the app as well, and we can take it from there.
Yeah.
All right, thank you so much.
Cool.
I'm going to hand over now to Luke and Sam from Aragon. If you guys want to take the stage. I think you just need to stop sharing your screen as well. And then Luke and Sam, if you could just start with a quick intro.
Sure. Yeah, let me try and share my screen here. Does that show up for everybody
Yes.
in presentation mode? Cool.
Mm-hmm.
Yeah.
Great, and we can get started. So Eragon Fundraising is a product that we're going to be launching fairly soon. We should be on Rinkeby next week. I was kind of hoping to actually do a live demo, but instead we're going to use slides. I've got Jem from Aragon Black with me as well. Aragon Black has been working on the implementation. If you guys aren't familiar with Aragon, we've got a bit of a broad structure. So there's multiple teams working on multiple different things and collaboration happens. So I'm from Aragon 1. We do a lot of work on the core client and some of the apps that most people are familiar with right now. And then Aragon Black has been working on the bonding curve modules and the fundraising scheme. And if you've been in the Curation Markets community for a while, you may actually be familiar with this project under its like kind of earlier name, we were referring to it as apiary, based on a kind of short paper around bonding curve-based fundraising that I wrote almost a year and a half, 2 years ago. And now we're just finally getting to the point where all of these various pieces have kind of come together. So the basic idea here is that Eragon Fundraising will allow you to attach a bonding curve to an organization token, and the organization token can have voting rights. It can have various different privileges within the Eragon organization that it's attached to, and the bonding curve collateral can be gradually released to the organization to actually fund operations. So we kind of think of this as essentially like an initial exchange operation tied directly to a DAO, and anybody can kind of launch one of these things. So the overall flow will be like, if you're just getting started, you'll have like an onboarding screen where you specify a target funding goal, a funding period, and then some other kind of parameters here, like the monthly allocation or the tap rate. So this is the amount of funds that are going to be pulled out and released for discretionary spending by the organization. This like initial goal is done to bootstrap the bonding curve. So you have some initial collateral, and you can kind of set some of the parameters more intuitively than if you actually had to specify your reserve ratio and supply parameters from the get-go. So this abstracts a lot of that away. It also allows us to have this sort of pre-sale period where we can apply vesting to these initial initial cohort of people that are buying before the curve is initialized. So a user would go through this process, they'd kind of fill this out, and then they'd be in this pre-sale phase where they can point people to their organization's fundraising app. They'll be able to provide like a markdown-based description that can like link out to various like due diligence materials or like GitHub repos, or like just kind of pitch the project that they're working on. And patrons can come in and purchase these like pre-sale tokens that will be attached to the bonding curve. In the event that the minimum fundraising goal isn't hit, the people that have purchased tokens will be able to come back and withdraw them, and the curve won't ever actually be initialized. But if the initial fundraising is successful, we actually initialize the bonding curve, and now we basically have like a built-in exchange mechanism for the organization and the organization token. So this UI is kind of designed around not really showing like a bonding curve, but actually showing a much more traditional like exchange view. So we've got some of the key metrics related to like the token's market cap and implied market cap based on the price offered by the automated market maker. We've got stats about the amount of funds that are held in the reserve, and how much is being pulled out on a monthly basis based on this tap. And if you click on new order, we'll see that screen in a minute. You can actually buy and sell and trade against the bonding curve. But if you click on the orders screen, you can actually see a paginated list of all of these various orders. And some will show up as pending, and this is because we use a batching mechanism, which we'll talk about in a bit, where we group multiple transactions together before they're executed, so that we can avoid front running. And then the kind of last screen, which is more relevant to the project itself, is where you can edit the tap settings. And there's some restrictions that are built into the contracts to prevent you from like increasing the tap dramatically. Like there's a percentage that it can change per month, at least increasing, so that like the project can't immediately increase the tap and completely empty out the collateral in the bonding curve. But the process for changing the tap can, there's a bit of background noise. If somebody is not on mute, it would be great if they can mute.
Some other people.
Yeah. So if you adjust this tap rate or you propose a change to this tap rate, you can have like the governance structure of the organization be required to do that, which can be a like multi-step approval process. You can have it require approval from like the people that are raising funds, so the project members, but also the people that have these bonded tokens approve of any changes to these sorts of things. So you've got kind of this built-in back and forth accountability between the like patrons that are kind of supplying capital to this organization and the people that are actually spending the capital. And this is what the buy and sell interaction looks like. So you can specify the token that you're interacting with and the amount of tokens and place an order. And it'll try and summarize the price that you're going to pay. But similar to Uniswap, we can't give like an exact price in the front end. Once the transaction goes through, that's the estimated price, but depending on what other orders happen within that batch, you'll get a slightly different price depending on how it executes. And we've got some built-in slippage protection that's parameterized as well. So that's kind of like on the UX end. On the more technical end, we've designed this as a set of like modular components as like multiple Eragon apps that can be pieced together and connected to the other apps in the system. So the main contract is this controller, and that's kind of like tied to all of these other components in the default configuration. So most user interaction and interaction from other applications are going to go through this controller contract. The controller contract, once it's initialized, routes buy and sell orders and configuration parameters for like changing collateral settings to the market maker. And the market maker right now is basically the Bancor formula within a contract that's been modified to allow for batched ordering. Then the market maker actually is granted the mint and burn permissions of the existing token manager app provided by Eragon. And the token manager app allows other issuance parameters as well. So like you can have a situation where outside of the bonding curve, if you want to provide specific like rewards for specific types of actions, you can have a separate permission to the token manager and a separate app that actually mints additional tokens, and that'll be reflected in the price of the curve. The token manager is connected to an actual mini-me token as the controller, and that mini-me token can be connected to various apps within the Eragon ecosystem, such as the voting app. So you can have people that have these bonded tokens actually participate in governance if they want, or they can be completely passive. And then the other thing that the market maker does is connects to the pool contract, and the pool is effectively the collateral reserve for the bonding curve. So it's actually the collateral is held in a separate contract from the market maker. And mostly this just holds those tokens. It doesn't do a whole lot, but it does expose the safe execute function, which is pretty interesting. And the use case for that is for organizations that have governance tokens used as collateral in their pool, like the AMT token, for example. They can actually delegate voting rights to a member of their organization using the organization's collateral, because the voting process doesn't require like moving those assets. It can be done with the safe execute function. And effectively, the safe execute will allow you to perform any action so long as the balance of the like protected tokens doesn't change at the end of that action. The tap contract is granted permission to transfer assets out of the pool, and it does so based on the tap rate function that I described earlier. So on like a monthly basis, the tap will move things from the pool to the organization's vault, where it can be attached to the finance app or voting app, so that the funds can be moved at the discretion of like whatever the organization's governance settings have been parameterized as. And so that's kind of like the high level overview. It's a bit complicated on the surface because everything is modular and tied together, but it adds a lot of flexibility. So we can have various different templates that have different governance processes that allow for different use cases where you have like bonded token holders having direct control over the assets as they're released, or you can have like a single project founder that actually directs all of those resources, and people are using the bonding curve to kind of curate projects that are managed by like external third parties. The batched order system, I think this is going to be kind of the first sort of production case of the batch bonding curve implementation that was described by Billy in a blog post earlier this year. Effectively, what this does is allows us to process multiple orders in a batch over the course of several blocks. And so one of the main concerns with automated market makers like Uniswap or like basic bonding curves is that as soon as your transaction to send an order is put into the memory pool of the blockchain, it's visible to anybody. And if somebody sees that order, they can front run you and like sandwich that order, placing like a buy before and a sell after based on manipulating the gas price. And so using a batch system prevents that behavior, which is sort of value destructive to the ecosystem. The automated market maker is completely compartmentalized. So we actually did some experiment with a separate implementation from Bancor. For production, we're going to use the Bancor formula just because it's been battle tested quite a bit, and it meets our needs. But we've had some internal discussions about using more complicated market makers in the future, allowing us to do things like sigmoidal curves and stuff like that. So it'll be kind of a drop-in replacement when that happens. Then another thing to touch on. So one of the reasons we're taking this approach for fundraising for DAOs is that we believe that the advantage of long tail liquidity provided by bonding curves is really important for like small organizations that are like managing a single GitHub repo. It's not going to attract the attention of large market makers, certainly not on traditional exchanges, and probably not even on like new permissionless exchanges like Uniswap, because there just isn't enough volume to warrant people locking up their assets and taking on that risk. But with a bonding curve controlled by the organization, we can guarantee that there's always a way to exchange these tokens or redeem them, and you don't have any sort of counterparty expectation there. The other big advantage of this system for organizations doing fundraising is this tap-based accountability. So the tap provides a kind of continuous stream of funds that's relatively predictable. You specify a specific amount. Those get withdrawn effectively continuously, and this impacts the price of the market maker function. But the organization never has like full direct access to the collateral pool. And so people that are funding the efforts of a project can allocate lots of funds and get access to these tokens and influence the direction of the project. But if the project isn't really delivering, if there's like delays, not all the funds are released all at once. And this is kind of in contrast. So a lot of people have compared Aragon Fundraising to the DICO proposal that Vitalik, I think, posted about, I think a year ago, where token holders can basically vote to liquidate the funds. Using the bonding curve and tap mechanism in the way that we are allows an individual to actually just exit without having to like rally the support of a majority of token holders to actually exit the project safely. So we think this will be a much more incentive aligned approach to interacting between DAOs and crowdfunding. And the other kind of cool thing that we can do here is consider the tap as a net outflow of capital from the pool. And that is used to allocate labor and work and do productive organization activities. And the ideal case is those productive organization activities will either generate or attract capital to refill the pool. So you have kind of a net inflow, net outflow approach. So if, for example, you use this to bootstrap the development of an application, and that application has a stream of revenue generated by fees. Let's say you create a decentralized exchange or something like that. People start using it, it's successful, you've got fees coming in. If you direct those fees or a portion of those fees into the pool contract, it will counterbalance the tap outflows. And if inflows are greater than outflows, the price of the bonded token will rise according to the market maker. So that's kind of the presentation. We have an active GitHub repo under Aragon Black Fundraising. We've got an audit with consensus diligence that's kind of wrapping up. And we've got Rinkeby deployment scheduled for the end of next week. So hopefully it'll be available for people to play around with by Berlin Blockchain Week. We're going to be there and hopefully have a Rinkeby deployment that everybody can play around with at ETH Berlin. And we're targeting our mainnet deployment and kind of product launch for September.
Cool. Awesome. Thank you so much, Luke. That's really cool to see all of your guys' updates. Does anyone have any questions?
Yeah, one question. This is Spencer. Really cool work. It's awesome to see this. I'm curious at a high level, or maybe if there are details that are relevant. I'm wondering. Well, I guess are you familiar with the concept of continuous organizations? And assuming so, can you give like a high level compare and contrast between that approach and this? To me, it seems there's a good number of similarities, but I'm sure there's some key differences.
Yeah, absolutely. I'm very familiar and have a good relationship with Thibaut. I would say the biggest difference right now is the mechanism for capital flowing from the bonding curve into the discretionary pool. We actually, in the contracts, have the ability to have a fee percentage on buys and sells. So we could actually do that same model. But we opted to go the tap route for like the initial launch. But the key difference there is with the tap mechanism, you have a kind of continuous time-based flow of funds from the collateral pool into the discretionary control of the organization. Whereas in the continuous orgs mechanism and also in the augmented bonding curve mechanism, which is another approach that's very similar to this, you have a percentage or flat fee tied to buys and sells, and those fees go into the discretionary pool. So you only actually increase the discretionary funding when people are trading against the curve. So I would say that's the biggest technical difference. The other major difference is in tactics. The continuous org approach has been very much from day one working to try and find a solution that ties really well with specific regulations in specific jurisdictions, where our approach has been to make sure that things work on kind of the technical platform level, and then work with partners in various different jurisdictions to ensure that there are compliant portals that can kind of tie into this. And we actually think that there's a lot of cases where the compliance won't be as relevant, for smaller community-based orgs. Hope that kind of answers the question well enough.
Yeah, that's helpful. Thank you.
There's a question from Paul here in the chat. Where do you guys foresee the biggest challenge from a user experience investor perspective?
That's an interesting question, and it's very broad. I think based on the feedback that we've gotten talking to people is that one thing that we'll definitely want to tackle in the near future after we kind of launch with this is tackling discovery. So like rather than having the organization point to their specific org and go into the actual like client to fundraise, we want to make it easier for either partners to build like discovery platform portals that kind of list and curate specific organizations that have active fundraising, or actually provide a general like discovery platform where people can browse between these orgs and see where they can join or interact. I think that piece, along with kind of the regulatory compliance aspect, are probably the biggest questions in terms of like onboarding that we've received. So that's kind of where our area of focus will probably be.
Yeah, and maybe I can say also a few words about that question. I'm Jem from Aragon Black, by the way. Yeah, I think with regards to UX, one of the main challenges is to make all the relevant information available to the user. And so as you see, there's lots of moving parts that are particular to the projects themselves. How much tokens are vested, what is the distribution like, and most of this information can be very relevant for the investor. So kind of having this seamless UX where everything is represented without crowding it out too much for the average user, I think this is going to be one of the main challenges after deployment in our iterations.
Thanks, guys. Paul, I hope that answered your question? Okay, cool. Great response. Does anyone else have any other questions? I'm opening up the floor now, so you're welcome to just unmute yourself and ask any questions.
Maybe I can also like talk a bit about the onboarding campaign. It's not going to take super long. So, and then I would like to make a call for the Curation Markets community to potentially, if they have some mechanisms in mind, apply to our onboarding program.
Yes, of course. The stage is yours.
Awesome. So, yeah, so as you see, it's not super simple without like accommodating yourself with prior knowledge in mechanism design, prior knowledge in bonding curves, or finance in general. It's not so easy to understand all these like indicators and metrics. This is why we wanted to create a deliberate onboarding program so that we could assist mechanism designers who have, first of all, the capacity for implementation and also impactful and potentially replicable use cases that can propagate after deployment. So with those parameters in mind, we have selected a few projects which qualified, and then we initiated this onboarding process. And I could say that the process itself is a work in progress, but we're covering significant ground because there's a very great learning curve. We're asking better questions and giving better guidance after like each iteration. And yeah, we've also discovered that like each use case is extremely particular and needs due attention to get these like parameters that Luke walked us through right. And some of these differences are due to variations in like stakeholders of the project, their cost structure, or the regulatory environment they're operating in, or their revenue source or something. And this is the reason why we are like for now managing this process hands-on, where we have obviously plans to create a more seamless process for just like going on Aragon's website and being able to deploy your DICO with the fundraising module on the mainnet. But like I said, for now we are like, due to the complexity of the initial starting point, we are managing this process hands-on. So we are actually assisting with however much human capital we have, few projects to set great examples of like how this can be done in a responsible and efficient way, impactful way. And unfortunately, right now we cannot talk about who these projects are due to like some strategic concerns and just third-party relationships. But basically, for each project that is being onboarded, we ask for a pledge that they will share their mechanism and how their experience using Aragon fundraising, so that this can actually stand as like a replicable model for other projects that would like to create tangential, impactful use cases. So yeah, one of the main goals have been this, like crystallizing these design patterns into these like reusable templates, and hopefully like after certain iterations you will find those templates already within the like Aragon portal. And yeah, this is pretty much it. And I would also like to so we have created a Google form so for projects to apply. So I would like to actually link that up in the chat. So if anybody or friends of friends have interesting mechanism that that would be fit for Aragon to serve as a fundraising or DICO platform, then please fill this form, and hopefully we will be in touch. And questions are welcome.
Like, thanks so much for that. Yes, please do share that Google form with us. Are there any other questions?
Yeah, I still had a more general question. Yeah, guys, thanks so much again for the presentation. I've been really looking forward to seeing an update on this, and it's incredible to see how much progress you've made, and like that, like the launch is pretty much like testnet launch is imminent. So yeah, thanks for all the hard work. Quick question, just kind of as a follow-up question. Both of your responses were great, and yeah, the question was a bit broad. I think one of the biggest challenges that we're having at Molecule is still the basic user experience of like what the hell is a bonding curve. And I think even within the blockchain community, it's a hard concept for people to grasp. And onboarding people outside of that community, gets even more difficult. And
yeah,
I see you guys have made some really cool progress on like kind of abstracting away from the bonding curve, just showing it as a trading pattern. But I was really wondering what you guys thought, also maybe in the context of engaging different types of organizations or communities, and the feedback that you've gotten, and how you kind of intend to approach the UX of a bonding curve itself over the long run.
Yeah, from my perspective, I think that it'll be interesting. I think it's hard, as you kind of correctly indicated, to actually like introduce the concept of bonding curves, both in terms of UX and just sort of like at the conceptual level to users. Like, and that's a big problem in general. There's a lot of complexity, not only with the bonding curve stuff, but just in Web3 in general, that you have to overcome. And the more that we can kind of simplify that, the better. With the fundraising case, we kind of are fortunate in the sense that we can boil it down to effectively an exchange, and people are fairly familiar with the concept of an exchange. But if you're doing something like a sigmoidal curve, or you're doing something where you're trying to like do something a little bit more like bonding curve specific, that like you wouldn't necessarily see in a normal exchange pattern, I'm right there with you. It seems like a really hard problem to solve, and I'm super interested to see what people start to come up with, and as we start to push the boundaries, and think about other use cases. I think sigmoidal curves could be really interesting for like community type use cases. So if you imagine like subreddits and stuff like that, which would have slightly different boundaries. That might be abstracted away in a very different way than like an exchange would. But I just don't think that it's tenable to have users try and wrap their head around what a bonding curve is. I guess would be my response.
Yeah,
Yeah.
I agree.
I'll go.
I have a.
Sorry, go for it.
No, go ahead.
Oh no, I was just going to echo what Luke said about abstracting away these like primitives, Web3 primitives from the user, because I mean, even we had the similar problem with in the context of DAOs. Like you give people DAOs and they don't know what to do with it, or like how they operate, or how to kind of mechanism design the governance processes entailed inside the DAOs. So things are actually have to be packaged in certain ways, where actually there's a paradox, because you are abstracting away the raw primitive as is, and at the same time you want to be you want to make sure that the user is responsible while operating these things. So that's kind of the difficult paradigm to navigate.
If I can just jump in quickly, I think in general, I think it's a good idea to abstract away these underlying things. And from I spent a lot of time doing user experience in the financial services industry, and really what people kind of need to understand are actions and consequences of those actions, right? So it doesn't matter why something happens so much as when you're in this situation, this is the outcome. And if you can keep it at that level, I think people are much easier. It's much easier to understand, and it's less intimidating.
Yeah, definitely. Good to see you here, Stephen, by the way. We should catch up someday soon.
Yeah, I'll send you an email. And like I said, we spent about 4 or 5 years doing research at the largest financial services institution in South Africa around investor behavior and how they interact with data. And you know, it's a very fine line, because if you give too much information, you actually confuse people. So you need to give enough, but not too much. But some people are more sophisticated than others, so it's quite like a nuanced line you have to walk all the time.
Totally. So I can answer that question from the common stack side as well, or not answer the question, but add to that. We've really moved to explaining what benefits curves can deliver and not how they work. And we look at kind of the bonding curve as like an estimator of community produced value. So you have some good that is being produced by a commons, some resource, whether it's open source research and development, or any natural resource protection. And the bonding curve basically acts as like an estimator of that provided value. So you kind of have a market, and of course there's the speculative nature of this as well, because you don't just smoothly follow the bonding curve. But I think the way that we look at bonding curves is a little bit intuitively misleading. That we're looking at the phase space of the bonding curve. So we're looking at price and supply. And really what happens in time, if you draw it out in its temporal, it looks like a normal market. It goes up, it goes down, it goes up, it goes down. It looks like a stock market. But when you're looking at the phase space, it's kind of intuitively misleading that, this is how it's going to work on the curve. They're actually not that huge of a difference from normal markets. The real benefits they deliver are liquidity. And depending on the types of curves that we can offer, I mean, it's very hard for people to look at a bonding curve in its phase space and understand what that means economically for them, because we think temporally as well. So we're kind of looking at bonding curves as like dynamic stabilization of economies. So this is like when you integrate like machine learning and AI in this, you can basically create an economy that stabilizes itself around some defined goal using a bonding curve. So it's not necessarily the human actors that are looking at the bonding curve and going, oh, it's a great time to buy. I mean, they will, because there's still markets. There's arbitrage markets between secondary markets and the curve. And I mean, you can still use it like a market. It's a one-sided market, but abstracting away a lot of that hands-on bonding curve stuff and just allowing them to be basically an automation layer, an economic automation layer below human participants.
Yeah, I'd like to follow up on that as well. And you're definitely right. Education on the benefits of these primitives is definitely the hardest part of it. And we sort of came at it from two ways. One is it's not hard to explain in a one-page Medium post what a bonding curve is at the core of generating secondary tokens on a static pricing function. The other side of that is exactly abstraction. And the thing we did was just make a widget that you can pull out of the platform. And then using CSS, you can chop out as much of that as you want to and put it on a third-party website. So you can abstract that away. And I think, as you said, the easiest representation of that is sort of the temporal pricing, where it's showing what it's been doing from a price point up and down rather than displaying the static pricing function. But we've had big success using the widget and allowing other users to paste that on a third party and abstract away or show as much as they want to of it.
Yeah, I definitely agree with that, Luke. And I think they actually would cause markets to behave so non-intuitively that I don't think regular human economic actors would be able to intuitively work through how like sigmoidal curves would impact those market dynamics.
Yeah, I think if you tried to abstract that as a normal market, it might be even more confusing for users than if you actually tried to like show the actual curve dynamics there.
Yeah, for sure. Lots of exciting experimentation to be done.
For sure.
On that note, actually, for next month's call, we have Jeff Emmett presenting on some really exciting news coming out about the common stack. So he's going to be one of our presenters for next month. There is still an available speaker slot, so if anybody is interested in presenting next month, please just drop me an email. There's one question that I thought I'd end up off with, and that's Jay Welsh asking, is there anything like crypto zombies for bonding curves instead of Solidity? If anyone has an answer to that or would like to respond?
I think Aragon Fundraising will be the closest thing that you can experiment and like tweak things like curve parameters, but yeah, Solidity has been around, but bonding curves are a very recent phenomenon, so I guess we're going to see tangential tools arrive a little bit later.
Yeah, if you're just asking about a toolkit for generating these and playing parameters, actually deploying them, you can definitely use the platform that we demoed earlier and generate curves with as much as a MetaMask transaction and a few basic polynomial functions, and kick them around and then bond and unbond. So there's definitely a toolkit out there, but I wouldn't go so far as to say that it's a course on generating them from basic Solidity. It'd be more just using the tools within the platform.
Perfect. Well, I hope that answers your question, Jay. And that kind of brings us to the end of our Curation Markets call for today. So I just want to say a big, massive thank you to all of our presenters and to everyone that participated in the discussion at the end. And we hope to see you, or we'll probably see you all again in a few weeks' time, probably in Berlin. I see Maria's on the call. We're really looking forward to East Berlin. You and your team have been putting a lot of work into that. And yeah, if any of you are in Berlin, please feel free to reach out. We'll probably organize a small Curation Markets gathering at some point, even if it's just some drinks in the evening. But yeah, otherwise we'll see you next month. Thanks, guys.